Whether you're looking for growth stocks, dividend stocks, healthcare stocks, defensive stocks, there's something in this list for everyone. I'm going to share with you the best 9 stocks according to my calculations, according to the universe of stocks that I cover, and I cover over 150 companies. I'm going to share with you the best 9 of those companies that I follow. And by the way, I think investing in stocks is an excellent way to generate wealth or create wealth for the long run. So let me share with you my list of the best 9 stocks to buy and also my reasoning for why I believe these are the best stocks to buy now. And I'll share with you how my picks have performed so far in 2025. 2024 was a great year of results for my portfolio against the S&P 500. I'm starting off to an excellent start in 2025. Hopefully, the rest of the year will bring more of the same. I'll share with you just how great this year has been so far with my portfolio. So let's get started.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, the first stock on my list of best stocks to buy right now in March of 2025 is AMD, the AI company that's struggling to compete with NVIDIA in the data center AI market, but it's growing very quickly with revenue and profits nevertheless. The market is not enthusiastic about AMD stock right now, and that's allowing investors to get this stock at a relatively cheap price. The current market price is $101 a share, and my intrinsic value calculation has AMD stock worth around $245, $46 per share. And I'm going to share with you another valuation method that also points to AMD stock being undervalued at current prices. Look, AMD is not going to catch up to NVIDIA this year, probably not next year, and probably not the year after that. But it doesn't need to. It just needs to be a good second place finisher in this industry in order to generate great returns for investors in the long run. The next stock is Alphabet, which is also having a difficult year to start 2025. Alphabet, remember, was rated as my top stock to buy in 2024, and it delivered solid results compared to the S&P 500. Right now, Alphabet stock is at $170 a share. My intrinsic value calculation has Alphabet stock worth $238 per share. The primary reason why Alphabet stock is underperforming is because of how large language models are disrupting its Google search business. Still, the company reported excellent results in its Google search segment in the most recent quarter, and the AI overviews in its Google search results are going to deliver excellent returns for Alphabet, and they're already getting a very strong response from consumers, which are saying and using that service a lot more and engaging with that service a lot more. The next stock on my list of top stocks to buy is NVIDIA. NVIDIA is trading at a current market price of $118 a share. My intrinsic value calculation has NVIDIA stock worth $136 per share. NVIDIA is also off to a slow start in 2025 as the market is more concerned about its prospects in 2027 than it is happy about its current growth rates in revenue and profits. Management said that demand for its next generation technology is sold out and profit margins are expected to return to growth in the back half of this year. I've liked what I've heard from NVIDIA, and I think the current market concerns about its prospects in 2027 and beyond are overblown. And I think its market dominance in artificial intelligence for the data center is only the beginning, and there's going to be multiple years of excellent spending in that category ahead. The next stock on my list is Oracle. Oracle is trading at a current market price of $165 a share. I have it calculated, my intrinsic value per share at $215. And I think Oracle is one of the undercover AI stocks that's not getting much attention, but the company's business is growing and it's booming. And the backlog of orders that Oracle's receiving is growing by the billions and billions. This is one that I think can be a sneaky winner in 2025 and beyond. The next stock on my list is Amazon. Amazon's current market price is at $209 a share. I have the intrinsic value calculated at $286 a share. And I think Amazon has done an excellent job in developing economies and scale in the logistics business, in the e-commerce business. And of course, it's always done a great job in the Amazon Web Services, the cloud business, which has returned to growth or re-accelerated growth in 2024 and continues that trend in 2025. The higher margin businesses, which includes AWS and advertising, are growing faster than the low margin business, which is e-commerce. But the e-commerce business, reaching economies in scale, is also expanding profit margins much more quickly than I thought it could do 5 years ago. So I'm enthusiastic about Amazon stock, and you're able to get Amazon stock at a relatively cheap valuation right now. The next one on my list is Uber. Uber is trading at a current market price of $76 a share, even though it's already up almost 27% year to date. It's having a great start to 2025. I still think there's considerable upside. I have the intrinsic value per share calculated at $108, and I've done various scenario analyses on Uber stock, and in almost every scenario I consider, Uber stock looks undervalued. DraftKings is the next stock I'll mention here. The sports wagering online company and iGaming and daily fantasy sports business is growing due to increasing consumer demand for this product and the significant convenience it adds versus the previous ways people were betting on sports, which was primarily in the black market and even in the iGaming segment, which is not yet growing like the sports business. It just adds so much convenience to people that want to place a bet now and then, and the business is doing very well. Current market price at $44 a share, even though it's already up 18%. I still think there's upside here in 2025. My intrinsic value per share has it at $62 right now. The next one is Pinterest. Pinterest, the current market price is $36.70. Even though it's already up over 26% year to date, I think there's more upside left in Pinterest as my intrinsic value calculation has it worth $70 a share. Pinterest is benefiting as people are going to the site more often, increasing engagement. It's increasing the average revenue per user, and it's growing in the very lucrative North American market for social media users, a difficult category to grow in because the market is so saturated already. And last but not least, Eli Lilly, which is already up 21% year to date in 2025. I've had this stock rated on my list of top stocks to buy all year. Current market price at $933. My intrinsic value per share has it calculated at $2,600. Now, with healthcare stocks, there is a wider distribution of the intrinsic value per share because of the peculiarity of their business models. And so I've done several scenarios with Eli Lilly, changing my estimates and assumptions to figure where I could be wrong and where the valuation might be different than what I've calculated. And even in those scenarios, I've calculated only one scenario has the stock being worth less than the current market price. And that's a very unlikely scenario with the beta over 1, which is rare for healthcare companies because they're not correlated with the broader market. And so I see an opportunity with Eli Lilly, and I think there is upside even after the stock is up so much to start 2025. So I shared with you my discounted cash flow valuations for these companies, but another way I look at valuation is through the forward price to earnings. And even according to my forward PE, those companies that I've highlighted right now, the best 9 stocks, they're relatively cheap. The most expensive being Eli Lilly at a forward price to earnings of 32. The rest of them are under 30, and you might be surprised to find that NVIDIA stock is trading at a forward PE of just 20, and you have AMD and Alphabet stock, which are trading at forward PEs of 16 and 16.78 respectively. So these stocks look cheap regardless of when I evaluate them using a discounted cash flow or when I evaluate them looking at the forward price to earnings ratio. they look cheap. And that's partly why I've placed them on my list of best 9 stocks. Of course, I have dozens and dozens of videos on these companies. And if you're a channel member, you get access to many of these discounted cash flow valuation videos that I've done for so many of these companies. You can watch those videos, which are members only videos, if you join as a channel member. Now, let me share with you my performance of the portfolio in 2025. This is the year-to-date return profile of the 9 stocks I mentioned. So you have Amazon at minus 4.64%, NVIDIA at minus 12%, and I share with you the full list of returns for transparency, and I'm going to compare it against the S&P 500 index, which so far year-to-date in 2025 is up by 1.26%. So here's my portfolio and each of the stocks that I mentioned earlier, the best 9 stocks, and how they've performed so far in 2025. With Uber, Pinterest, and Eli Lilly and DraftKings up considerably so far, and the rest of them are down year to date, including NVIDIA, AMD, Alphabet, and Amazon. Overall, though, my portfolio has performed excellently. It's up 5.43% year to date in 2025 compared to the S&P 500 index, which is up 1.26%. So my outperformance so far is nearly 4 times more than the S&P 500, my outperformance being 417 basis points overall. That doesn't mean you should just take my recommendations and go out and buy these stocks without doing your own due diligence. I'm just sharing this for transparency's sake, and I do this every month with my list of stocks that I'm recommending as the top stocks to buy. Sometimes the portfolio will outperform the S&P 500. Sometimes it'll underperform the S&P 500. Regardless, that doesn't take away the responsibility from you to do your own due diligence before deciding to buy any of these stocks. So there you have it, the best 9 stocks to buy now, according to my calculations.
Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.